to you.
Thank you, Jani, and thank you very much for inviting me today to be a part of this discussion. Definitely timely given what we're going through at the moment. We'll see the tariffs coming actually into implementation today. If nothing changes and the status quo remains as is. So it is definitely an interesting and slightly worrying time as well, particularly for the exporters in Sri Lanka. But I think the social impacts that it can have if our largest industries like apparel struggle, we might have much more severe consequences. But in my slides, I'll kind of take you through the impacts as we see them in terms of what the impact is in terms of short term as well as the more longer term kind of impacts that we see. So in terms of our view and our expectations, what we see is that Sri Lanka could actually see a reduction in the long term in its export earnings of about $350 to $400 million. To keep in mind, this is not an impact that we're expecting in 2025 itself. And in our research, we've been talking to apparel manufacturers, textile players. At the moment, they're not seeing an immediate reaction even from their customers. But what we could see is new orders that come in for the future seasons could, for example, see a change in terms of where it goes. So we're not looking at this as an impact in the immediate term, but over the long term, we could lose about 300 to 400 million annually because of the direct impacts to the US in terms of the taxes that have been imposed. So a couple of ways in which we look at it is, of course, there's going to be a slowdown in terms of the US itself, in terms of its demand as a result of these tariffs and increase in price levels, right? So we've seen even in past cycles where the US goes through recessionary periods where apparel imports to the US or US consumption of apparel drops steeply. And for Sri Lanka, this has tended to be steeper in terms of the export drop compared to what it has been in terms of the overall US consumption of apparel in a global sense, right? So we've assumed here about a 10% reduction that comes in from directly US consuming less from Sri Lankan manufacturers. Right? In addition to that, we also see that because we have a higher tariff rate, that could be a rerouting of orders that could take place to countries that have more favorable tariffs. For example, like India and even Bangladesh, that is currently relatively cheaper than us in terms of the tariff that currently exists. Right. So from that, we could see even about another 15% kind of reduction. And in some sense, there could be some level of cushioning that we could even see going forward because China has been tariffed at 104%. Vietnam is tariffed at again 46% higher than Sri Lanka. And China and Vietnam together account for about 40% of the US's total apparel imports, right? So this kind of orders being rerouted, that quantum of volume that has to be shifted away will need to move to other nations that already manufacture, in which, in some sense, Sri Lanka could see some level of cushioning as a result of that. But if you're looking at the net impact, because Sri Lanka imports parts of its textiles in order to manufacture this apparel, the net impact of it is about 210 million in terms of an export loss. And if you consider a further reduction in terms of the other types of exports to the US, such as rubber, you'd see about 180 million in terms of a reduction overall that we could see. So rubber is also another industry that is more impacted compared to the other industries that export to the US. Because, for example, manufacturing happens also in Thailand, Indonesia, which are facing lower tariffs than us. So particularly not necessarily rubber, the agricultural component, but more in terms of the manufactured articles that are made out of rubber. So overall, we're expecting about 400 million loss that could happen annually over the long term. So as I've been mentioning, apparel, textiles, and rubber products are the most vulnerable right now. So you can see about 30 to 40% of even activated carbon, rubber, as well as textile apparel exports go to the US out of the total exports that Sri Lanka sees in these individual commodities. So as I've been mentioning right at the start as well, so US apparel consumption overall could dip by about 10%, affecting Sri Lanka because of the higher pricing that they will face. So the graph on the left really shows you the impact that US GDP growth has in terms of the overall consumption of apparel within the US, right? So for example, in the global financial crisis, apparel imports to the US, or you can term it as consumption of apparel into the US, dipped by about 12%. In 2020, during COVID, it dipped by about 16%. For Sri Lanka, these impacts were a little bit more pronounced during this period. So, for example, during the global financial crisis, Sri Lanka's apparel exports dipped by about 14%, and during COVID, it was over 20%. So, we assumed about a conservative number that we might actually see about a reduction of 10% based on the historic figures that we're going by here. So important to keep in mind is also that the US consumer is not going to see an increase in terms of the tariffs in terms of their prices of their goods by 40% themselves. So it's the incremental value that will really be charged to the customer. So for example, Sri Lanka manufactures currently a cotton t-shirt at about $4.50 is the price at which it enters the US. That is a cost to manufacture it. And a retailer will sell it at about $21 on average, right? So when the tax increases, and assuming that the 44% is really slapped on the existing 13% tariff, this increases the cost exported by Sri Lanka to about $6.27. The retailer is then going to just apply the additional component in terms of if they wanted to pass on that price increase. Of course, how they choose to do it, how much they pass to the consumer versus how much they try to kind of get their supply chain to endure is also a question, but they won't be getting charged 40% additional price. And that's important to keep in mind as well. But overall, what we're seeing is that analysts are assuming that overall consumer prices in the US could go up by as much as 2 to 3% as a result of these tariffs, probably more now that China is getting taxed at 104%. Some of these assumptions were based on China actually getting taxed at the 34%. So the other direct impact, apart from the US consumption slowing down, is this rerouting of orders that will, right? So the initial intention of President Trump in terms of introducing these tariffs is really to move manufacturing back into the US. It is difficult, particularly for a labor-intensive product like apparel, right? As you can see in the graph on the left, this is the cost of manufacturing a men's cotton t-shirt, right? In terms of the US customs data. And what you can see is, of course, Sri Lanka is at the higher end compared to our regional players. And that's just because of the type of product that we produce and the type of brands that we produce for. But the US is about 2 to 3 times more expensive, 2 times more expensive even after the tariff, 3 times expensive prior to the tariff, right? So it is very, very unlikely that you'll actually see apparel manufacturing moving to the US. It is possible for more machine intensive production to actually move to the US, which Sri Lanka is not too exposed to in these contexts, but labor intensive is going to be difficult because, like, as you can see in the graph on the right, a labor cost is very, very high in the US, the wages that they have to pay compared to how much it costs within this region. Bangladesh is one of the cheapest markets to manufacture in, right? So because of that, we don't really think that manufacturing is actually going to move into the US rather. And Sri Lanka could also slightly benefit, as I said right at the beginning, from some spillover orders that come. So there will be some component that does get rerouted. So we're hearing, for example, that certain players who have networks in terms of manufacturing facilities in other countries might shift their EU components to Sri Lanka and the US orders to other countries, right? But for example, you're looking right now in terms of the largest apparel sources to the US being China and Vietnam, right? And they are the two highest taxed right now. And US has also been firm in the stance that they don't want not just China, but anyone that routing their orders through China, like Vietnam, to get any kind of concessions. You're seeing Vietnam, for example, going in, really trying to de-escalate the situation, saying that they'll reduce their tariffs to zero. They'll try to reduce the trade surplus that they have with the US, but the US is really not budging for this reason. And as a result of that, if some of this manufacturing really moves outside of China and Vietnam, you can actually see some level of cushioning because there's such a large quantum that they supply to the US that it would need that no single country really can take it, maybe apart from India, but they don't have the facilities to do that at the moment. So it's not a short-term change that we will see. It will have to happen over a more gradual period if these tariffs remain as they are. Another region that could really benefit is regions like in Africa. Kenya, for example, getting taxed only at 10%, right? Even Ethiopia. A lot of them had manufacturing facilities. Some of them, for example, in Ethiopia, had the AGOA, which fell through. So these manufacturing facilities are kind of just laying there unutilized. So you could, for example, go in and set up there. So these kind of regions could see a larger benefit, particularly Africa as well as India, which is taxed at a much lower rate compared to the rest of the region. Could see some of these being rerouted, but it's going to take more time in order to set those things up, right? So another advantage, like I said, is that a lot of the Sri Lankan apparel players actually have some amount of vertical integration and a multi-country presence in terms of if they wanted to shift their orders around, right? Um, Brandix, Hydramani, Miss, as well as Hella, having facilities all over the world. So you can shift their orders, for example, that go to the EU to Sri Lanka and move those orders out, move those US orders to these other countries much faster, and that will mitigate the impact, particularly say on corporate earnings and things like that, and the impact on the local industry by their ability to do that and reroute orders within their own network of factories, right? So at the moment, based on our calculations, the top four of these would have about 19% kind of available capacity in terms of shifting orders around to other countries. So in addition to this, what you see is that based on our channel checks, there's about maybe about 40% in terms of some of the high value products that account for within Sri Lanka's apparel manufacturing that becomes difficult to really move to other countries because the type of skill that it requires, right? The synthetic lingerie and so on, that becomes very difficult to manufacture in other countries because of the type of labor, right, and the training that is required. So as I said, it's going to be about 12 to 18 months before you can really set up a factory in another country and think of rerouting your orders, even if it's India, for example. A lot of their facilities are not compliant with the standards that are required by current US retailers. And as a result of that, that also means that it takes time before you can actually shift some of these orders away. Right. So again, we're talking medium to long term in which we could see this shift of orders kind of happening, and how we could also cushion uh, or see some cushioning of that impact as well. But I think in an overall global sense, it does look like the recessionary conditions that have been talking about for the last couple of years are going to be a lot more pronounced and come faster, right? So if global growth is to slow as much as about 1%, which is what analysts are expecting right now, this of course has an impact not just in terms of apparel exports or exports to the US, but in terms of in terms of our overall export basket, right? So we see this relationship displayed over time, where when global growth slows down, Sri Lanka's exports also move simultaneously and in tandem to that. So if there is this large global growth slowdown, there could be a further impact of this, even if a 1%, even if say, for example, our non-US basket sees about a 5% hit, it's a loss of about 500 million in our annual exports, and which can be significant once you add everything up together. So these are the risks that we need to watch out for, which are difficult to quantify at the moment because of how volatile things are. So as I've spoken a lot about volumes and how much the volumes and the revenue of these companies could be affected, one of the biggest risks they are facing is really in terms of their margins, right? So what you see is typically in periods like this, when US particularly enters a recession or the global economy starts entering a recession, is that retailers tend to want to cut their cost of production, and this gets passed on through the supply chain, right? So you can see with the graph on the left, for example, during the global financial crisis, there's a reduction in terms of that average export price that we face to the US, right? So when Sri Lanka's export prices declined by about 1%, whereas globally the prices to the US declined by 5%. In 2020 as well, we were expected to take a significant reduction of about 13%. And we're just recovering from those price reductions that have been implemented even in the last couple of years. So again, very limited in the space of taking any cost increases from our side in terms of some of the apparel manufacturers, because of the very thin margins that they operate on. Between 1 to 5% means that they have very low space to take any cost increases. So it means that they will have to follow through with major cost rationalization measures, and the kind of really assess the operational sustainability of their businesses, whether it means factory closures and so on. And this can be very significant on the macroeconomic environment. And I'd like to kind of just touch on that for about the next 5 to 10 minutes or so in terms of understanding the overall impact that this has on Sri Lanka's economy at large. So you can see in the graph on the left the impact that the relationship that Sri Lanka's GDP growth has with apparel exports. If you kind of look at the previous period prior to COVID in particular, you can see that there is a relationship when Sri Lanka's exports underperforms. Those are also the same periods in which GDP underperforms. So a lot of this is of course driven by global factors, but it does affect the Sri Lankan economy as well. And we see about 15% of the workforce is actually either directly or indirectly employed through the garment sector itself, right? So, seeing if you see, for example, factory closures and layoffs that will happen because of margins being too thin to operate and needing to cut down costs, or because volumes are coming off, this could have a very significant social impact as well as in terms of GDP growth. We are just coming out and we're just starting to see our consumption starting to pick up, right? And this can really stall the progress that we've seen so far, and the progress that we see that we would have expected to see in terms of say 4 to 5% GDP growth in the future, which can come off if these kind of layoffs and things like that happen and unemployment starts to increase, right? Because spending power will reduce. In terms of the balance of payments overall, immediately we're not seeing a very negative impact. As I said, orders are continuing as they are. But the positive impact is actually that global commodity prices are coming off, right? So we're seeing oil, for example, Brent crude right now is actually at about $60 a barrel, right? And that's the significant price drop compared to where it was a couple of months ago. And given how important the oil fuel is in terms of Sri Lanka's overall import basket, this saving can actually be very significant and very positive in the near term, right? So here what we've done is we've assumed that Sri Lanka's volumes actually continue to increase from where it was last year. And assuming if the Brent price averages at about $65 a barrel for the rest of the year, it means you could actually see a saving of about $500 million, right? And this could actually set off some of the losses that you're thinking about in terms of, say, the apparel reduction also. Right now, at $60, if it averages at that, we are seeing a much more significant saving. So as a result of that, we're not really seeing any significant threat in the near term to our currency or our balance of payments at the moment. Even in terms of tourism inflows, even with the global growth slowdown, there could be some impact. But as we see, a larger portion of our tourists are now starting to come from India, which is relatively sheltered from the global trade war. They're working on their own bilateral trade deal with the US. So we might not see too much of an impact even in terms of the current account in terms of tourism inflows. So our expectation of the US dollar by the end of the year compared to Sri Lankan rupee is at about 305 to 310. We've seen a little bit of weakening over the last couple of days, but we don't expect this to continue in a major sense. But one thing to just keep in mind on the balance of payments is while there is no near-term risk, and we can achieve some of the reserves targets that the IMF has laid out for us, which is about 7.1 billion by the end of this year, and we can comfortably achieve this year's target. What we need to worry about is actually achieving the next 2-3 years reserves targets. As you can see, the accumulation or the build up in reserves that we are expected to have based on the IMF's targets becomes much higher. This year it's 1 billion increase in reserves. Next year it's 2 billion increase in reserves. The year after that it's a 4 billion increase in reserves. And that becomes difficult, for example, if our exports basket really starts dropping, right? And these 2-3 years down the line, if tariffs remain as they are, it could be a much more significant impact. Companies can start setting up their operations in other countries, and we could see a structural reduction in our export basket, and that could be more worrying because, for example, our oil import bill or the oil prices may not always be at the $60 level. So that is something to be concerned about in the next 2 to 3 years. In terms of interest rates, again, our view still remains that interest rates should start stabilizing. There is a little bit of volatility we are seeing right now with a little bit of pressure because of the uncertainty involved, and rates have gone up about 30 to 50 basis points. Even at today's auction, a lot of it was not accepted in order to keep the weighted average yields at the same levels. But if you're looking at inflation, for example, for next year, and that is a key indicator of what the central bank is thinking in terms of their policy rate guidance. If oil bill, if the oil bill is lower, this means that our inflation in the future is also going to be much lower. Even for 2026, if you're looking at it, because central bank plans on very forward-looking inflation, it could actually be lower than the 5.6% that they've expected for 2026. And interesting to note is that the central bank over the last at least 4 to 5 monetary policy meetings have actually downgraded the inflation forecast continuously. And this could be more positive and give them more space for a rate cut, which is in line with also the global policy, where we're looking at faster rate cuts happening in the US as well, in order to reduce the impact of this growth slowdown overall. So I just wanted to kind of summarize our macro impacts along with the impacts on the various sectors. And I'll close with that, Jani, and open it up for the discussion.
Thank you so much, Trisha, for that insightful session. In the interest of time, let me quickly start the panel discussion also. Introducing our first panelist, Mr. Dulit Hera, known as the king of e-commerce in Sri Lanka, is the founder and chairman of Kapruka.com, the country's leading e-commerce platform. A computer science graduate from University of Kentucky, he previously worked at Microsoft and Dell Parrot Systems. His ventures include Java Lounge, Grasshoppers, and Kapruka Global Shop, as all of us are aware of. Mr. Hera also played a key role in securing Sri Lanka's Amazon country account and have received multiple awards for entrepreneurship and continues to revolutionize digital commerce, empowering local businesses for global reach. Introducing our next panelist, Dr. Thamara Bandara, a seasoned consulting entrepreneur with over 20 years of experience in business advisory and professional practice. He is the founder of SEB Corporate and Corporate Doctors Private Limited and a chartered accountant, Sri Lanka and England and Wales. Currently serving as the Vice President of AAT Sri Lanka, he also holds board positions in several public companies. Also, Dr. Chamara represents Faster Capital, a global business incubator, and is a respected figure in both business and academics. We warmly welcome both you gentlemen for this panel discussion. Let me start the conversation with Lith. So in an interview in 1988 on the Oprah show, Trump has mentioned that he would make all US allies to pay their fair share. And he actually expressed his concerns about how other countries were taking advantage of US by dumping all their products. So when I listened to it, his perspective seemed to be quite reasonable from his perspective, his point of view. What are your thoughts on this, Dule? Do you think he has made the right decision for his country?
I mean, it all depends on how we evaluate the word right and where this right word really belongs to. But, more than 50% of the US population is on his side, from the time of the election itself. And now it has actually grown his popularity. So we have to always remember, even though we always, we see it as a problem to us, majority of the Americans actually see this as a long-term positive effect on the country. I mean, there's always a hate group, but majority is thinking that. And I think what he's trying to really do is close the trade gap and decrease income tax for the citizens of the US. So their salaries will be much higher. So they can actually pay these $2 to $3 increases or whatever it is. Right? So, I mean, US income tax is around 35% upwards. But if we actually manage to bring that down significantly, even make it zero, like for example, like Dubai, this is going to be a very much a win-win situation for them. So I think, again, it really depends on who you ask what is right and wrong for them. But with that, I think it kind of summarizes where it seems to be heading. Majority of the Americans will be pro what's happening.
Thanks, Dulit. Moving on to Dr. Chamara. Doctor, Sri Lanka doesn't have a very large trade surplus as such with US, but has been tariffed at a much higher rate than most of the others with higher trade surpluses. Why is this case for us? And do you think it's unfair by us being a small economy, or is it unfair by rest of the small economies in your view?
Chani, thanks for the introduction. I think I have different views regarding this particular entire scenario of US behavior, especially Trump's behavior. What I can see is, I'll take it that to a question later, but still I address a little bit before I go to the theoretical part of this story. Now, when it comes to tariff that they impose on our economy, that I personally never expected that US would do that thing, because we are a small economy and the less developed country. But irrespective of those, Trump would have thought that our percentage of tariff that we charge on them is 88%. It's a simple mathematical calculation, very simple mathematical calculation. Therefore, there's no any scientific basis for this percentage of calculation. When it comes to tariff calculation, there are some certain accepted formulas that I don't think that they have applied it for anybody like you, not only in Sri Lanka. This is completely it's completely a deal making arrangement. It's deal making arrangement in the sense like, what I give you, what I can get from you. So that's the thinking mindset of Trump. What I pursue and look at him through various other readings and observations and my deep thinking of this particular thing. Therefore, this is not only for us. It's, though we say fair or unfair, but this we should be able to make a deal with him. I'm positive that we can do it. But before I take that question in detail, so let me make everyone aware of what is this about this tariff thing and this what's happening. Now, when it comes to the world, like, free economy, the free economy, free trade or free market economy, which is right now, up to now, in the sense up to these tariff things before it comes, it was a rule-based, right? It's not a fully open, right? It's not completely 100% free. It goes on rule-based. When it comes to rule-based things like, large economies or the competent economies, strong economies have to protect poor economies, poor countries, poor people. If we are stronger, if I am a poor and weaker person, you have to protect me. That's the arrangement when it comes, especially international trade, that other parties shouldn't be unfair or treated badly or victimized of powerful nations. Now, in this scenario, this free economy concept or the rule-based economy was formalized by UK, US, and its allies. Right? They are the people who brought this free economy. Now they are trying to go away from this rule-based system and go for a full-scale free economy. They built the independence. They built the dependency. Everyone has to depend on them. Like, when it comes to, you and I go together, fly up, Johnny. Right? Let's go fly up. I'm taking you up because I'm so powerful. Once I took it up, then say, sorry, Johnny. So now I have to drop you. So this is what is happening right now. In simple terms, this is unfair for the people who trusted them heavily and depended on them heavily. Apart from them, Johnny, there are certain cycles happening in the world. The first cycle, when it comes to empire, that the UK was the country and the play of the world that all we had to depend on them. That cycle went away, and then it went to the US. Now, US is also trying to go away from the cycle, and the new norms are being created. It's a natural phenomena on the other hand. Right? Every time, for a longer time, one party, one country, one region cannot play it. Right? So this is maybe the start of that, I personally believe. So therefore, one thing is sure, if this continue with the US behavior, this free economy will be reestablished without a rule-based system, right? If there's no rule-based system, if there's no rule-based system economy, now who will be the winners are the competent, smartest economies are the ones who win this game. The poorest are poorest, the weakest are weakest. So weaker people are victimized. So survivors are the most competent and smartest economies will be survived because they can retaliate. They can challenge the other party. Right. Therefore, or otherwise, right, the world will be divided into few camps. Right? Will be divided into few camps and then fight each other. Right? So this could happen with this trade war. Trade war sometimes ends at where that arms conflict that we don't know, right? So that is up to that this trade war is happening, heavy retaliation, right? Very uncertainties everywhere in the world. So that of course exactly we can't predict by now, but there's a possibility. Now therefore, going away from this concept of free economy, rule-based economy, it comes like self-interest first, self-centered economies. Like you have to take care of yourself first. That's what it is right now that we have to think of. Every country is thinking like that. Now, when it comes to UK, once that US imposed its tariff on UK, they got a different path. What the Prime Minister says that. So we have a calm and pragmatic approach. Whereas China got a different aspect of retaliation. Before China, Canada took a very, very first-hand decision that they decide to retaliate. US, the neighbor, close country. So likewise, the countries are behaving by themselves with their own interests. The politician would say interests of the public or the people, whatever it is they say, but this is a self-centered arrangement. US is to take care of US, people and the economy. Sri Lanka has to take care of Sri Lankan economy and the people likewise all have to think that is a self-centered, the self-centered interest is coming first than the globalization. Therefore, there's a kind of a full stop the globalization that could be affected partially or fully. Therefore, this is going to be a toughest war. In my life that I've seen trade war, this is a toughest war that I have a fear. This might go for a arms conflict one. But one thing, Jani, with this particular trade war scenario, not the US, right? There will be another winner, right? Another winner. Even the Tricia said that thing also very clearly. When it comes to US is trying to build their own economy, especially through manufacturing arrangement once again in the US. But it's not that easy and it's difficult for them because that living standard of the people of US is compared to different that against India and China. So manufacturing cost, various other elements of US completely 100% different from other countries. Therefore, there could be another force will be generated or built by this particular war. That's the end. So now, when it comes to the question of whether fair or unfair for Sri Lanka, as I told you, it's fair by US side because if we impose 88%, if we impose 88%, they can also say we are going to impose 88%. Right? It's a fair deal, but they said that 44% is our tariff. That is what they say. Therefore, I'm 100% sure that because we can negotiate with them and we can protect our industry, especially garments. And there are some other industries I'll talk about how that is going to be affected in addition to garments. In case, assume that the negotiations goes up to that level, and in case they ask us to reduce our tariff to the low, there should be a US cheaper goods might influx or inflow to the country. So therefore, our local industries also got affected. But by the way, we are not a manufacturing the country like China. Even there are certain Chinese products, low-cost product also flow into the country through various platforms. Therefore, that is not a new thing for us. There's a possibility that US some cheap products would come to Sri Lanka if the price negotiation, the tariff negotiation went up. Johnny?
Thanks, Doctor, for that descriptive answer for us. Trisha, you already touched upon the impacts in the medium term and the shorter term, longer run. Just for us to have clarity, what what is the magnitude of this effect on the shorter run, and then immediately when can we expect this impact to be materialized? And also, like we've heard that the country president has already written to US president and discussions are underway. Do you think there are any possibilities that they could reconsider and they can have some flexibility towards us for a potential revision of tariffs? Trisha, you're muted. Yes.
So in terms of the near term, I think really there's no major economic impact that we'll see in the immediate term. The first thing that I think will really hit us is really the fact that it's actually positive, as I said, that the oil will come, right? You're not seeing an immediate reduction in terms of your orders. In terms of your new orders, sure, there might be a little bit of a reduction, but I think that's because everyone is just evaluating the situation right now and not necessarily taking a hard call on Sri Lanka itself, right? So, for example, a lot of them are freezing their kind of orders from a lot of nations, not just Sri Lanka, in terms of assessing whether these tariffs are going to stay in place or not. You don't want to get caught to a higher tariff in the interim period if they decide to change their tariffs afterwards, right? So the immediate net impact is actually more of a benefit right now if, for example, Sri Lanka decides to purchase their oil right now at lower prices. But in the medium term, in the current sense, you're also seeing a little bit of volatility. So, for example, interest rates are going up slightly. This increases your borrowing costs for the country. But I think these are, very, very near, very short-term kind of factors. And once people really understand that this is not going to affect our overall export sector immediately, some of these fears will come off, and you'll see interest rates kind of falling back down again. The equity market has seen about a 7% fall. Again, some of this is an overreaction because some of the counters that have fallen are not directly impacted by these exports as well, right? So there's no reason for them to kind of see this kind of dramatic fall that it has seen. So some of this will see corrections thereafter as well, right? So the immediate reaction has been panic, but I think it's important to remember not to kind of overreact to these kind of situations. But when we will really start seeing the impact in terms of our export basket and so on, I think you're looking at it being maybe 12 to 18 months down the line, right? It's really a matter of time of realizing of, I think there's a good possibility that some of these tariffs will get revised. I think it's just a matter of when do they come to the realization with depending on what their stance is. Is this just simply a negotiation tactic to get everyone at the negotiating table and then kind of decide to change the tariffs? Or is it that they genuinely believe that there's going to be manufacturing that is going to move into the US? And at what point do they realize that that's not necessarily happening, at least on sectors like apparel and things like that? And then they decide to change it more selectively. And at what point do they make this realization? So is that going to be soon or much later? But if things do stay as they are, I think you're looking at still 12 to 18 months before we'll see a substantial reduction really in terms of our export value, because as I said, it takes time to move these orders out of the country. Even if it's in terms of, for example, rubber exports, I think there is a part of it that can move out more immediately compared to, say, apparel, for example, because, but again, some of our manufacturers are still exposed even in some of these other countries. They have facilities in Thailand, they have facilities in Indonesia, so they can take some of this as well and not see, for example, a reduction in terms of their corporate earnings, which then has an impact in terms of corporate taxation and the amount of revenue that the government collects, right? So I think before we see the big impact, it's going to be 12 to 18 months down the line. But we'll start seeing near-term trickling indications of where things are heading. And I think there could be a revisal. It's just a matter of revision of these tariffs, but it's just a matter of when and what the exact intention of imposing these tariffs.
Thanks, Trisha. And coming back to Dulit, so you are the best person to talk about the impact of these tariffs that as you're expecting on your businesses, and what are going to be your strategies to mitigate them in the shorter run as well as in the longer run, Dulit?
Wait and see is the biggest strategy that I'm going to adopt. It's really way too soon to do any kind of movement. Like for example, we are selling Dilma tea to Akbar to Samahan to all these tea brands and cinnamon brands on Amazon USA, right? So there's quite a bit significant growth in that we've been really investing in and getting into, but now that's going to be like really on hold. I know we talk a lot about apparel, and then but then again there are and rubber, but then there is the long tail of it, of seafood to the food that I mean, especially actually seafood and tea and cinnamon that we export to the US. I don't think it's still a huge market for Sri Lanka, but it's in the long tail of things. So wait and see is the approach. But I think for Sri Lanka in general, um, I think I'm really hoping, fingers crossed, that we will get some sort of a sympathy vote, because we were a bankrupt country a couple of years ago, and we are just coming out of it, and we are in an IMF program, and they're expecting us to be on that program. So how do we pay? So we might get that sympathy vote. I'm keeping my fingers crossed to that. But in the long term, I think Sri Lanka has to move beyond apparel, right? Move beyond apparel and get into services, high tech, and more value added agriculture, and beyond that path, because seems like none of this is going to go away completely. It'll get adjusted, reconfigured, but it's never going to be back to where it was, right? So that is, again, I don't think that anybody has any solution other than to really wait and see.
Thanks, Lily. Coming back to Doctor. Doctor, now this 44% tariff, Sri Lanka couldn't have avoided this, right? So we can't suddenly buy 3 billion worth of more US goods, especially we do not need their type of typical high value US exports, such as machineries or military items, etc. So even services, imports also might not help us. How do you think we have to face this situation as a country altogether right now?
Now, Johnny, I think Dolly said very exactly the question what you asked. So now we purely depend on, we're not purely rather, right? Always focus on garments. That's really good. And it's not that bad about the garments, but we have to look at other sources of income. And also we should not depend on one or two countries. That's another way we have to look for strategies where that get ourselves this situation as an opportunity to get ourselves changed from this particular system of dependency. So it takes some time. You can't do it in 1 or 2 years, but we need to have a very clear plan. Like as usually I use the word of strategic planning is required throughout the this is because of this problem. So to get out of these problems, we depending on 1 or 2 products is the right time for us to look at service industry. What Dolly said. In addition to that, if you are depending on the foreign currency, therefore exchange we needed, that's a tourism is another source of income. Definitely we can improve that segment. It's 100% sure. It's more than that sure. Still, we did not tap India and China market. We always expect the Europe tourists to come and enjoy Sri Lanka. I spend much money here, but that era wasn't. It's gone now. So we have to expect, like when it comes to Malaysia, remember that Malaysian population is 28 million, 28 million, 30 million. You know that the tourism population of Malaysia is 25 million annual population. So likewise, we have space of so much to earn foreign currency. We might not able to go for the manufacturing nation like because of the India and the China, the production cost is very low. Very, very low. So at least there are certain industries we can focus. The industries what we have to focus right on those things rather, getting so many things into attention and struggling with it. Better to be focused in few areas where that nobody can compete like our competencies and the cost structure. So those are the things we should definitely look at. And also, and the in case that the negotiation goes normally the negotiation that I prefer what Duri said is correct, like the sympathy vote, where that we can use it. That particular scenario, what has happened to us as an advantage for the negotiation, right? So probably definitely there's a consideration from US, because I remember yesterday one asked question from Donald Trump. What is that Mr. Modi is a bit tough negotiator. What he said is a better negotiator, right? So we have to be a better a negotiator. He definitely understands our situation, probably through IMF. We should able to convince him. But there's a time because they are also busy now, right? It's a very chaotic situation in the US and administration. There is so much of request and the problems are they have to face because of this tariff thing. So there's a delay. So until this delay comes, normally I would like to propose, like, like it's a formula, like, how to negotiate, how to deal with this problem. Now I remember that. So can we ask US to roll back the tariff, roll back to a thing what to impose? No, we can't do like Canada and China. So retaliation is not the thing that what we can do. Then what I say, 0 for 0, right? Okay, you are 0, we are 0. Can we say like that? There are countries, they said like 0 for 0, especially Singapore and Israel, I remember, 0 for 0. That is another basis of negotiation, but even Donald Trump didn't listen to them. There's a what's called the baseline tariff that the US imposed on those countries who said that we are going to charge 0 on their goods coming to their country. That is not going to work as well. The best formula what I can see is that 2:1, right? What is it right now? 88 and 44, 2:1. It's a very simple formula. So 2:1 and further reduce it to maybe 44:22 and stay at that level for a while until get our things strategized and the plan it happens. Then only we go to the next step of this thing of the further negotiation, because we have to signal the US, right? Signals the US that this is our deal. Our deal, what we are going to make is not one-sided consideration. It's a both side. Both have to be winners. Right? Both have to be winners. That's what I think Trump understands. We both have to be winners. So it shouldn't be one-sided. And then we have to protect local industries in case if they force us to reduce our tariff from 88 to say 30% or 44%. As I told you before, there should be cheap US goods might flow into the country. Therefore there should be a situation in the country that we have to protect local manufacturers and the traders. So that was important. And then to encourage pace negotiation, also very important, first, second, third, etc. So I think government should have those tactful negotiators. So then I think we can win in the sense to go for a better rates, because vulnerable countries, most victimized countries, Lesotho, that's African country where they do garments and then also diamonds. So that's a much affected country than us. So they're struggling immediate, closure of factories because of branded products are being manufactured in Lesotho, that is for US market. Even some other countries also they stop exporting goods to US. So US, the country concerned, there should be definitely high inflation. There should be pressure finally on employment. That means the employers to increase their salaries because to cushion this particular inflation situation the country. So let's see, Johnny, the situation, how would it come? Yeah.
Coming back to Trisha on the same line of thinking, do you see this also as sort of a chance to rewire the Sri Lankan trade future and also to use this shock to fast track sealing the deals or the trade deals like EDCA with India and opening new markets? How do you look at this situation, Trisha?
Yeah, I think this is definitely kind of the push I think the government needs in terms of getting some of these conversations underway, really kickstarting. I think the government in place has been there for about 6 to 7 months now, and of course, the global economy doesn't stop while they're still getting their feet on the ground. And I think it really is important to kind of really get the professionals that fully understand these, and there's a lot of work that's already been carried out in a lot of these areas, right? They don't have to rewrite the playbook by themselves. I think it's important to get those people in the conversation. I think this conversation about the US and the trade tensions, I don't think it's going to go away for a long time. As much as we are talking about it, the tariffs being revised, the trade tensions are only going to escalate. Just now, about 15 minutes ago, China has retaliated, saying that they're going to impose 84% tariffs on the US, right? So it's not going to go away. And it's important for us to also take a look at our export basket. Are we diversified enough? And it's the conversation I think that has been taking place for decades now, and not much has changed. If you look at it, our export of goods, particularly from about 20 2011 to 2024, 14 years, it's only been 11 to 13 billion at most annually, right? It hasn't changed much. And I'm not going to be very optimistic and say this is the chance and now we're going to see a complete change in direction. But I think it is definitely the push that we need to really start looking at diversifying, pushing a lot more free trade agreements. I think we'll have to look a lot closer at our neighbor. As you can see, India is striking a better deal compared to a lot of the other countries that are involved in this, right? There is a soft spot, so to speak, in terms of Donald Trump and their negotiations with India that have taken place. They're the only country apart from Israel, I think, that we're seeing that they're trying to work out a bilateral trade agreement with. And there's a reason for that. And we're sitting right next to them, right? There's a lot of advantages that we can really start taking into account. Can we potentially, if they're at a much lower tariff, I think they'll probably waive off some of the tariffs, even at the 26% to a much lower for India. How can we take advantage of that by being part of the supply chain that goes through even trade moves to India, right? That requires us to really move fast forward with that, as you said, in terms of ECTA and so on. But how can we also just increase the scope of of some of the agreements that we're discussing right now? I think the strategic partnerships, I think, have to escalate to a much larger extent, even in terms of our relationship with China as well to some extent, because you're looking at 2 to 3 global superpowers over the next couple of generations, and those are the three that are going to be in a conversation with. So we have to look out moving, as Dr. Chandra said, away from the US and also away from the EU, right? We are talking a lot about the GSP agreements, and as Sri Lanka grows in its GDP per capita, which is what we want to do, we're going to lose these. How do we sustain ourselves without the GSP agreements as well? We can't always want them to kind of be nice to us, right? We have to grow out of these dependencies. And I think it's just the next phase of growth that we have to really usher in, and be prepared for the consequences, but also really in terms of the next stage of growth, that when it comes, we have to be prepared to how do we deal with our trading partners as well.
Thanks, Trisha. So it's being prepared is what is mostly essential at this point of time. Let me come to Doctor, as I have, in the interest of time, I have one question that would go to both Dulit and Trisha finally. So Doctor, like, just to understand, we spoke about it, just to understand the impact of this on US market. And now we do clearly understand their intention is to strengthen their manufacturing economy. But does it look like that this is going to generate the results as much as they expect? And we do understand the issues that they would have with relocating the manufacturing entities there with their type of overheads, and within the price increases, how they would manage their inflation and how the rest of the economic indicators would also be affected. Do you think they're going to get the maximum out of this approach as what they were expecting?
So my prediction is very clear, John. So I'll tell you, I gave you some background information of world economy, the free economy, rule-based economy. If somebody is going away from the rule-based economy, full free economy, okay, that's fine. It's perfect. So within, we all have to be perfect. That's not the world. World is not that perfect, right? So perfect economy won't be happen. So irrespective of that, John. Now, US, that's a developed country. All we were depend on US economy, the powerful economy in the world. As I said, that's a cycle, that's an empire right now. So now they have their own problem. Every country is having their own problem. Those problem, what they say is maybe trade deficit or maybe debt, whatever it's called it in their terms, like those were built over so many years, right? The problem created in, or the problems were created in so many years. How can you solve the problem overnight? One day? That is impossible. If you go to do that one, there should be a definitely a disaster somewhere, right? Especially that US. So that's not the right arrangement, right? If you put that world into disorder, like in the sense, its order is being broken by them, and they are going to resolve their problem that was created so many years back within a day, overnight. That's another disaster. That's not advisable. It's not going to be, in the sense that what problem won't be solved. Now, apart from that, if I say like, okay, they are going to have their own manufacturing arms once again. For example, say all Europe countries and China and etc. stop sending goods to US. then US has to manufacture. US has to manufacture. US has to manufacture and sell in their country. Then they can't do it because, as I told you, the lifestyle of US and the way that things are happening in the US with the price structure is completely different now. Expensive of the manufacturing things, and then the rest of the world are free from those obstacles. For example, car is being manufactured in Europe or China, especially, would say the by name is a BYD. That will be sold whereas other part of the world, other markets, the lower price, whereas US cars being manufactured by Tesla will be sold as 60,000 per car, whereas 30 to 80,000 in outside US. So this is what the situation. This is not going to, US is not going to get benefited out of this one unless other than creating unnecessary problem. They should have this solve the problem systematically. They have to solve these problems systematically. It takes some time. So this is my opinion. US going to be in trouble. Yeah.
Thanks, Doctor. One last question to Dulit as well as to Trisha. Now, this isn't something like COVID or like a housing crisis in US as we experienced in the past that have been really bad on the market. So it's simply like someone telling that I want to make my mark and I want to take the control of what's happening. In your view, how would the local investors should react at this juncture? Dulit, let's go to Dulit first.
Yeah. So this is a more of a question for Trisha, but I think hold on to your cash. And because your liquidity is going to be key to make any kind of move. And if you just make the wrong guess, I mean, it's a real high gamble if you try to do any moves right now. So my simple answer is hold on to your cash.
Thanks, Dulit. Trisha?
Yeah, I think I broadly agree with that as well. I think the main thing investors should do right now is really not to overreact, not to panic, not to follow just the trend just because you're seeing it happening globally doesn't mean you have to necessarily take moves. I mean, if you're just to give very simple examples, people have been selling off even in terms of the local equities on companies that are completely unexposed to the export markets, right? And there's no reason for them to really do that. But I think and that is, I think, a method of panic, but also partially, I guess, as you did said, some of them are just trying to take some profits and hold on to their cash. So it's really a different strategy that everyone decides to take depending on their risk profile. But I think the most important thing really is not to panic, take a step back, assess whether these conditions are going to last very long. Right now, the markets are reacting to every small announcement. You're seeing the stock markets globally moving up or down on rumors and so on, right? So that's money being lost or being made. I think it's important in these times that you could be caught at the wrong end of that deal because of these reactions. So very important for just to hold, assess, and look at the bigger picture. I think it's important not to get swayed by the news, and the news is rampant. Every couple of hours you get a new update, so it's important to just